Good morning, Ajay. Always good to have you with us.
Good morning, Lata.
Well, this is quite
Thank
a
you.
rally the market has seen from that 7,500 scare we got last month. Do you think this rally has legs now, or will the earnings season or some such cloud put a break to the rally?
I think three things, Lata. One is very clear that there is a huge amount of surging liquidity in the system still which persists in India, which is waiting to get into equities. That's one thing very clearly is coming out, that the appetite has not kind of got shaken by the 7,500 touchdown. So to that extent, there is a great positive that there is enough people willing to buy shares when the market goes down, gives a lot of support to the market. But I think the bigger issue has been the global liquidity, that people have now become more comfortable that the so-called international liquidity issues with the rate increase is going to be postponed at least for 3 to 6 months, or maybe 3 months, maybe December. So to that extent, all the global markets have recovered to some extent. Maybe India has recovered a little bit more than the others. That is true. The third unfortunate is that does this rally have a fundamental leg? I would guess that's a verdict which is not there, because fundamentally the results will be out very soon and you can take a call on that. That fundamentally I think there is an issue in the market. Liquidity-wise, we have a surging liquidity. And the pointer to that is that if you look at this climb back from 7,500, who are the stars of this climb back? Companies like Jaiprakash, 45%. Companies like, GMR Infra, Lanco Infotech. All these companies, which are by and large fully bankrupt companies, were the star leaders in this run-up to this thing, which tells you what's the quality of the rally is going to be. Not saying the rally is not for real, but that's the quality of the rally we're looking at.
Okay. Ajay, hi,
You
good
put
morning.
the fear of God in us.
Good morning, Sunil.
No, we already had the fear of God actually. Less than a month ago, people were talking about a breakdown below the 7,500 level and, the doomsday scenario because of what's happening globally and how quickly the sentiments have changed. Do you think that we could get back to those lows? Because it doesn't seem like the worst is over.
See, Sonia, that's why I said we don't fight the trend. So we say, yes, there is enough liquidity in this country at this point of time, and that's been tested in the last 1.5 months, which can take the place of a large-scale foreign outflows. That's one good thing which has emerged in 2015. Having said that, I think, the precept of the market is that there is a big recovery, in economic recovery happening. And I think that's the one which is, if it becomes fallacious in terms of, or becomes a mirage or becomes too extended, you could see 7,500 or below. And I say that with the reason that one is, on one side, we are already seeing the international agreements keeping India out of it. You saw the TPP. India has been out of TPP. We were not even called to the table to discuss. So for all the international bonhomie that we generate, we were not part of the biggest trade agreement which took place in the last maybe in a decade or so. That's one. Number two is domestic demand. The oil price benefit is already in the system. Now, oil prices are on the way up. If not on the way up, at least will this thing. So there is no major benefit coming from now onward that which will be of such a large magnitude for India to redo its economy. So that tells you the story that if this rate cuts do not work, then I think we could be testing easily 7,500 or even below, because fundamentally, as I said, there is a serious demand issue in the system. Consumer sentiment is down at this point of time. There's a lot of overcapacity. So the revival symptoms which were there are just not there.
Okay, well, I have a lot of stock questions for you, but just on a point of detail, it's a little unfair. Trans-Pacific partnership. Ajay, it was Pacific-related countries. I mean, what were the countries? Chile, New Zealand, Australia.
Vietnam is there. Lata, Vietnam is there.
Vietnam is bordering
Vietnam is
the
there in the
Pacific.
partnership.
Yeah, it borders Pacific much more than we do, no?
Okay.
It's closer to the Pacific. No, all I'm saying is that it was Pacific-related countries. Countries which have a border with the Pacific Ocean. So let's not be so harsh on us. I take your point that we should not consider ourselves international masters.
Is that, Lata, why am I harsh is we walked away from the EU treaty on for a company-specific issue. We gave up negotiations. That's what I'm saying.
No, we are getting into
the
something
world
else.
is signing up trade agreement. We walked away.
No, that's a separate point. I was just giving you a geographic detail on Pacific. That's it. Nothing more.
Thank you.
I mean, we don't border the Pacific Ocean, so we have to take that in that interpretation as well. Okay, let's come back to stocks. Would you play the solar theme? I mean, Suzlon has a lot of positives going for it as a stock with good owners coming in. It got a rating upgrade yesterday. But is that a theme to play at all?
See, solar as a theme, I don't know it's a good enough theme because it depends upon the government to give a subsidy for the solar. You know, the solar rates are much higher than today the normal rates of power available in the country today. And we have surplus power in the country. So I think whoever plays the solar game depends solely on budgetary allocations to subsidize the power rates. There's no state electricity board which can buy solar power and pass on the rate because there's abundant availability of power on the thermal side today at much cheaper rates. So, you know, so I'm not sure what is the solar game because who's going to pay for this power? The government wants to cut back. People are not going to pay for power based upon the fact that it's double the price of a thermal power. So, yeah, it looks nice on paper, but fundamentally, economically, it is a flawed concept in a country like India, where we are trying to bring our costs down and there's surplus thermal power availability in the country.
Okay. Well, by the way, just one stock that you should look at is Transport Corporation of India. It's now up almost about 17%. Yes, that's the kind of move that you're seeing on TCI. Just pull it up for you. 17%, big volumes as well on that particular counter on the back of the demerger plan. So keep an eye out on some of these logistics companies. But Ajay, you know, for now the market is not really bothered about what the outcome of the Bihar election will be. But if indeed the BJP does fall back in this one and, you know, you get a lead by the Grand Alliance, then what's the sense you're getting? Will the market be heavily disappointed or the market will not take this as a referendum on the Modi government?
Of course it will. If we walk down the street, Sonia, I talk to all the industry, of course there's a big issue. And I think the comfort is that yes, it will run through or scrape through or something will happen which will allow BJP to come in. If it does not and it loses and depends upon the majority, if another Delhi happens, so let's say God forsaken Delhi happens, it's going to have a tremendous impact. Because, you know, the question is coming up really again and again is the delivery model of the new government working? And the first big test was Delhi, the second big test is Bihar. If the test shows that it is not working, there'll be tremendous pressure back on the government. So it will definitely, no, I don't think anybody is comfortable with the fact that if that stock market, at least to that extent, that there will be a loss of the national party, ruling party in the center, but market will remain sanguine as ever. I don't think so. It will impact the market definitely if the elections go the other way around.
So to what extent, Ajay, I mean, what could the downside for this market be if some of these cues work adversely?
See, I think the biggest, on my mind, the biggest issue today is not even local, Sonia, is the global liquidity. The moment that tap looks to be under threat, the moment the Fed decides to raise the interest rates and we have to go through the repercussions, maybe 0.25% will not impact so much as we are all fearing it to be, maybe we adjusted it. I think that's the bigger fear in the market is what will be the global stance. And the reason I say that is because even in the last turmoil, if you analyze the last 45 days of the performance, really there were not very large selling which took place, $3.5 billion from a $200 or $250 billion portfolio, which is not very large. But when $10 to $20 billion starts to move out, that's the time to worry. So to me, the catalyst is going to be global liquidities coming in or staying put in India compared to any local factor. Local factor can impact for a week, 10 days, 15 days and go back. But if global liquidity impacts, that will be a much longer term impact.
No, that point is absolutely taken. I mean, when the global fear strikes or liquidity withdraws, we will really know who's swimming without clothes, as it were. But Anuj, Ajay, the other point I wanted to ask you was, therefore, where will you hide now?
Lata, did you say swimming without clothes? My goodness.
Okay, okay, go ahead.
No, I think, even in a country like India, it's not all, there are very good companies and the very bad companies. And that's the way I say that they're investment plays and they're arbitrage plays. There are good quality companies who are doing well, who are even in this scenario holding their kind of head above the water, so to say. So you have already seen, for instance, corporate action like TCI, Sonia recommended it's a logistics company, good quality company at the end of the day. There are lots of debt-free companies which are doing well, including some PSUs. You have Concor, you have Nalcos of the world, and we have holdings in both of them, so that's for disclosure purposes. They are doing reasonably well in a good market share and a good stable platform. You have some software companies, you saw a result of a mid-cap company come out yesterday, done extremely well. So there are nuggets which are everywhere, and I keep saying it's ad nauseum, I'm sorry to use the word ad nauseum, is that the best place to hide, if you ever have in doubt in this country, is hide in pharma. Because one thing which is given for a sure that 1.3 billion people will fall ill over a period of time and will buy medicine in this country. And these medicines can't be imported. By and large, 90% are domestically sold. So it's a fantastic industry to be in, and you must be invested in this company. Whether mutual fund, direct stocks, whatever it is, your portfolio always must have 25% pharma at any point of time.
Okay, yes, I know. We've seen the way Lupin and Dr. Reddy's have just been, defying gravity. But what do you do with some of these beaten down names, Ajay? The ones like Tata Motors, etc., that have now made some attempts to rebound?
See, that's what I said. There are investment opportunities and there are arbitrage and, trading opportunities. Like I was on another channel about 3-4 days back. I said Tata Motors was an ideal candidate last week for a beautiful trading buy, and it gave fantastic returns for the simple reason is that US has had the highest growth rate in car sales ever in the history of United States in the month of September. Number two, Volkswagen is out of the system globally, not only in India. So two big things happening. It's good for any car company in the US at this point of time. So it's good for Tata Motors in my sense. Long term, they do not give great value. Sorry, there is a
siren.
Yeah. Long term, Tata Motors doesn't give great value because at the end of the day, which Tata company has given great value as a specific example. And that is what I say about people like Jaiprakash and all these GMRs and etc. These are not shareholder-friendly companies. These are promoter-friendly companies. They give you trading gains. They don't give you investment returns.
Wait, are you forgetting about TCS?
I know. It's rewarded a lot of shareholders.
TCS did reward, but Lata, last 3 years, it's not given the cost of capital. If you look at the last 3 years' returns, it's a good company, no doubt about it. Fantastic company, absolutely excellent. But that's what I said, that this is a company which is unique in Tata, this thing. The rest of the pack, if you look at Tata Global, you now look at Titan, struggling all the way. As for a disclosure, we are having short position in that stock as well. These are companies that are struggling. Tata Global with Starbucks, where has it gone with dirty restaurants in this country? That's not consumer space they know how to manage. So I think as Tata as a group, very good for TCS, but rest of the pack, don't invest. Similarly for other companies, I keep saying, like for instance, Vedanta. Good trading buys always, but that promoter has a history of taking his interest first. You don't want to be an investor in those companies. You want to be a trader in those stocks.
You can't paint the same brush across all of the stocks. I mean, Titan has been a great wealth creator. Come on, Ajay, you're being unfair now.
I have made, you're right. But look what happened to it eventually. When the old MD left, okay, Zirexis Desai, if I'm not wrong, that's his name was. What's happened to the company after that? This is a 440, 450 stock. It's struggling at 340, touched 300 if I'm not wrong just now. It is struggling for traction. It is struggling for presence. It's struggling for competition. They changed the business model this month, which will reduce their margins permanently. They've gone to a franchisee model, which will reduce their margins permanently. They had always company-owned stores. So, and look at the competition. Look at the jeweler companies which have come into place. They're not in the online space. So, so one guy made a fantastic company. But then what did it do with the last 1.5 years since he left? The company is going downhill steadily.
Point. Well, at the moment, those arguments do stick for Titan. Thank you very much, Ajay Srivastava, for joining us.
Thank you.
Very interesting conversation. But of course, those who were rewarded by the Titan and the TCS will think of the previous period as well.